Let us take up an integrated case scenario. KM Limited has engaged your firm for compilation of financial statement in accordance with the requirement of SRS 4410. Compilation, you're aware that compilation means it's nothing but you prepare the financial statement based on the trial balance and books of accounts of the company. You also come to know that the company is setting up a new unit in Rourkela, Odisha. The company management has provided you the draft trial balance and requires assistance in the preparation and presentation of financial statement as on 31st March 23. As I told you that compilation engagement, what happens? You will be given a trial balance and based on that you will prepare financial statement. The management requires such preparation and presentation for its internal use. It's for internal use they want it. During the course of engagement, it was noticed that there are apparent errors in the few opening balances brought forward from the previous year relating to some outstanding incentives receivable from the government authorities. So they have to receive incentives from the government authorities, it is receivable, but there are certain errors in the opening balances. These have been swapped with some other balances in the trial balance. However, there are no credit transactions in such incentive account or accounts whose balances have been swapped during the year. So there is no credit transactions in such incentive accounts or whose balances have been swapped during the year. Second thing, one of the team members suggests that it is one of the duties of to ensure that revenue figures stated in trial balance at least are verified to ensure that all revenues required to be booked by company have in fact been booked. Okay, so that is a completeness. All entries have been booked. That is what you have to ensure. It is also suggested that by this team member that even though it is a compilation engagement, quality control aspects like adhering the appropriate standards are needed to be followed. That is very much correct actually. Here you have to follow the quality control standards. It has to be followed. Okay, that's the thing actually here. Now I told you that we have to follow the part read, part solve approach. So you have to read the question partly and then you have to solve the question partly. That's what it is actually. So let us take up the question. In respect of errors in some of the opening balances noticed as described in this case, which of the following statement are most appropriate? Which are the following are most appropriate? Now, what are the statement which are appropriate? Such errors should straightaway lead to qualification of report to be issued. First of all, compilation person who does compilation engagement, he will not issue any modified opinion. It is not an assurance engagement. So A is definitely not an option. B, such errors should be brought to the knowledge of management. Yes, this we can hold it. We have to bring it to the attention of the management. But let us see other option. C, knowledge of such type of errors has no effect on the compliance of ethical requirement by the firm. No, that's not correct because see, we are there to prepare the financial statement as per AFRF. We are there to assist the management whether financial information is compiled as per applicable financial reporting framework. So C is completely ruled out. D, the above said matters later to SA 510 or initial audit engagements, opening balances, and has no effect on the reporting obligation in the compilation engagement. Now that is 510 will be applicable to an auditor who performs assurance services, who gives reasonable assurance, but it is not applicable to a practitioner. So D is completely ruled out actually. So opening balance has no effect on the reporting obligation in the compilation engagement. So this we have to consider because see, we are preparing the financial statement. See, what is closing balance? It's a what is opening balance? It's a closing balance of the previous period. So is that properly carried forward? That we have to see. So in this case, B is the more appropriate answer that the errors should be brought to the knowledge of the management. Let us go to the next question. As regards to the suggestion of one of the team members regarding the verification of all revenues of the company, which of the following statement is more appropriate? Which of the following statement is most appropriate? Suggestion of team members is proper as such verification is a part and parcel of such an engagement. So suggestion of team members is proper as such verification is a part and parcel of such an engagement. That is the thing here. So that suggestion of team member is proper and such verification is a part and parcel of such an engagement. So what happens actually here? Um, Suggestion of team regarding the verification of all the revenues. Okay, that's the thing here. So now let me just go back to the question, the second one. One of the team members suggests that it is one of the duties to ensure that revenue figures stated in trial balance at least are verified to ensure that all revenues required to be booked by the company, in fact, have been booked. Totally ruled out. We are not here to check anything. We are not here to do any verification job. Compilation engagement does not involve any verification job. So that is not at all correct. So suggestion of team member is proper. Option A is ruled out. B, suggestion of team member is proper. You don't have to read the other things actually because the suggestion itself is wrong. We are not here for verification. Our job is to compile the information. If we come across something which is wrong, then we have to tell them to rectify. Suggestion of team member is not proper as verifying the accuracy or completeness of information provided by management is not required by such engagement. Yes, this can be taken, but let us see the option number D. Suggestion of team member is not proper as compliance with qualitative requirement is not required by such engagement. So more than D, C is the more appropriate answer. We are not here to verify the accuracy and completeness of the information. That is not the job of the accountant who performs compilation engagement. Okay, fine. In view of team member suggestion relating to adherence of appropriate standards for quality control, which are the following statement relevant to the context of the said above engagement? So third one, again, third one, what does it say? It suggested that even though it is a compilation engagement, quality control standards like adhering to the appropriate standards needed to be followed. So quality control standards will be applicable, and in this case, SQC1 will be applicable. See, SQC1 quality control for the firm performing audit, review of historical information, and other assurance and related services. So compilation engagement falls under related services SRS 4410. So the third question number three seems to be the right thing actually here. So in this case, we have to comply with SQC1. Let us see the question. So SA220 is applicable in this engagement and has to be followed by engagement partner meticulously. SA220 is applicable to the audit. It is not applicable to this engagement. SQC1 is applicable in this engagement. Yes, it is applicable because SQC covers all four engagements: audit, review, other assurance and related services. So B we can consider. Both SA 220 SQC1 are applicable. Here straight away you can rule out 220. So this is a wrong answer. A is also wrong answer. D, SA 220 SQC1 are not applicable in this engagement. However, SRS 4110 lays down detailed quality control requirement for such type of engagement. No sir, SQC1 will be applicable. Okay, so 220 anyway, because 220 is applicable to audit of in quality control for the audit of financial statements. So it is more related to audit. So that is why SU220 is not applicable. So here your choice should be SQC1B is the right answer. Now the last two paragraphs we did not study of this question. Let us go to the last two paragraphs. What the last two paragraphs say is actually here, that fourth and fifth one. Before signing and issuing SRS 4410, you once again read the financial information. It comes to your notice that figures relating to setting up of a new unit of the company coming in Rourkela in Odisha has not been properly disclosed in compiled financial statement. Expenditure was incurred from bank account maintained in Rourkela was omitted to be shown in appropriate heads. You are vacillating regarding above considering the scope of the compilation engagement. So you once again read the financial information. So you notice that figure relating to setting up of new unit of the company in Rourkela has not been properly disclosed in the compiled financial statement. So there is no proper disclosure of the new business unit which is coming up actually here. Here you have to insist that they should make a disclosure. It's required because it's a part of accounting job. Otherwise you have to withdraw from the engagement. Let us see the fourth option. Fourth option, what does it say? Which of the following statement is most appropriate as regards to the omission of expenditure under appropriate heads? The above said omission can be misleading. By disregarding such omission, the fundamental principle of integrity is violated. Engagement cannot be performed as per ethical requirement. So you are omitting information, it makes the statement misleading. The above noted omission is misleading. Point number B. By disregarding such omission, the fundamental principle of objectivity is violated. An engagement cannot be performed in accordance with the ethical requirement. It cannot be performed as per the ethical requirement. Here, there is no honesty as such actually here. So A seems to be more appropriate, but let us see the other option. See, above noted omission has no effect. Definitely it will have effect. Why it will not have effect? Amount of information has no effect on performing and issuing reports under such compilation engagement. It definitely has an impact. Definitely has an impact actually here. So why not? You have to consider that. So here it's if you see this question 4, what does it say? They are setting up new unit in Rourkela, but they have not properly disclosed in the financial statement. So they are not talking about the new unit. So in this case, actually, my dear soldiers, it is more of a question of the integrity. The team has prepared detailed documentation during the course of engagement. So they have prepared a detailed documentation during the course of engagement. Let us see that. The detailed documentation is maintained during the course of compilation engagement. Which of the following statement is most appropriate regarding the assembly of final engagement file? Assembly of final engagement file uh, is most appropriate regarding the assembly of final engagement file. That's the thing actually here. So now the detailed documentation is maintained during the course of compilation engagement. Which of the following is most appropriate regarding the assembly of final what you can say final engagement file? That's the thing actually here. Filing, which is the most appropriate regarding the assembly of final engagement file? Let us see that. Um, Final engagement file should be assembled not more than 60 days after the date of the report. That's the thing here. This is not highlighted here actually. Okay, that is highlighted for standards on auditing. Then final audit engagement file should be assembled not more than 120 days after the days of audit report. Okay, then final engagement file should be assembled on a timely basis after the engagement report has been finalized in accordance with the time limit set by the firm. This can we can consider. There's no requirement of assembling final engagement file in compilation engagement. That is not correct. You have to assemble the final engagement file. So D is completely ruled out. So here the option C, that is final engagement file, should be assembled on a timely basis after the engagement has been finalized and in accordance with its time limit set by the firm. Okay. So compilation engagement is one engagement where you prepare the financial statement based on the trial balances. That's the thing here.